Mic check, mic check. What's going on, everyone? Good morning, good afternoon, good evening. Happy Monday. Missed you all over the weekend. Glad to be here doing our thing here together once again. I hope you're all well and doing great. It's actually a big day. We got a lot to cover today. I'm really looking forward to it. We've been focusing on the technicals all day yesterday on Twitter, making sure to fire off each and every break. The Discord has been just beautiful, beautiful foundation set there, and we're ready for what happens next. We're going to do it together. Great to see you all here on this Monday. Look, this is actually a big day, not just because we're seeing a breakout. We are seeing a breakout of, let's just zoom in really quick. We are seeing over here the correction of wave 2, and now seeing what appears to be a confirmed breakout. Now, let's just go ahead and just get the overview of what we're watching. This is the mid-cycle low occurring in July, and we've completed wave 1. We then have completed wave 2, and right over here, we are now appearing to be breaking out. High probability the low is in, and because the low of wave 2, liftoff, is in, it's a big day here at CTM, so we're going to get into it. We're going to cover it. We will go back and focus in on the technicals and make sure that everyone understands in real time everything that's occurring so we can continue moving forward together, because it is my goal to take as many possible with us. That requires a little bit of time and dedication on your end. I have noticed those that dedicate their time every day, whether watching live or on the replay here in CTM on the live streams, become giants. That's not kidding. The silent majority has already done great things. I thank you, each and every one of you, for all of your support, especially when you send those heartfelt notes. I'm grateful for it. Look, this was a big day. This was going back to August the 13th, 2021, sitting down with the professor and Ted, talking about what the CTM model was going to take place. And we were waiting over here for the bottom of wave 2 to be put in. Now, it does appear the bottom, the low, is in of wave 2. Just because we break out over here up outside the correction, that's not like, it's a high probability. There's nothing a given. It is the markets. Now, all stop losses, of course, at the lowest price point, somewhere around $53,000. That hasn't changed. Let's keep going. This gets very exciting today, so let's get into it. By the way, now that price is aligned off the bottom of wave 2, scale to the halving over here in this photo. I'll show it to you in one sec so we all can take a look at it. By the way, in 2013, from the bottom of wave 2 to cycle peak, it took 36 days with a 620% gain. In 2017, from the bottom of wave 2, it took 35 days with a 260% gain. Potential cycle peak is now December the 31st, 2021. It's always been my belief that we slightly outperformed 2017 out of liftoff. The bottom of liftoff on a closing basis around $53,700. If we just had, or if we do have on par with 2017, 260% return, that potentially takes us towards $193,000. Let's start this special session off here with just 1 or 2 minutes of when we were talking with the professor, putting that in place. If is the liftoff point another place that we line these cycles up? We don't know what happens between now and the projected liftoff point. We're looking for that double wave into the liftoff. Listen, I don't know how price gets there. We're going to find out in the months ahead. But do we consider lining this up as we do arrive to the low of the liftoff, or where the pullback starts?
Yes.
So it's not as if we're just continue to make this up as we go along. We've had some predefined points throughout this cycle, starting with obviously the halving, then as price made the new all-time highs, then as the mid-cycle low is in, and then the last vantage point that we've put in together is coming out of liftoff, because it's been 35 days, 36 days from the bottom of liftoff to the cycle peak. To not paying attention to that, I just feel would be wrong. Of course, we're paying attention to it, and now we'll be watching closely what price does, whether or not actually we do see some type of V out of liftoff, whether or not after, as we get towards the all-time high, whether or not we see some small consolidation and then price move sharply into liftoff. It will give us the greatest clarity about whether or not the model breaks and when that breaks, and what that looks like. We will be watching that closely. By the way, there are a few different ways that the model could break, right? One of the ways that the model could break coming out of liftoff over here, right? I'm going off of this, by the way. This is me being accurate. I do this work on the 2-hour time frame, and I just try to be as accurate as possible. We could see here that the break above the green line is now confirming the last repair out of place, and it looks like the bottom is in off of the bottom of wave 2. With that being said, there are a few ways that the model could break between now and the projected cycle peak. One of those ways would be if we see a third wave appear, a third wave where we come into correction again without getting too far or too high. Obviously, at that point, we would have to pivot and no longer believe that the model that we've held in place is going to provide any type of accuracy into that cycle peak or whenever it would be. There's another way that it could break also. We could come and rise up. There's a lot of supply between 61,000 and 63,000 right now. There's resistance over there, and price could come in and could make a lower high. And if price makes a lower high and then resumes down, taking out that last swing low we just put in around $53,000, at that point, the model has broken. It's not going to take us into a cycle peak at the end of the year. We would then pivot and make sure that we are positioned accordingly. And there's also, of course, price might not get any higher. This one looks unlikely at this particular time, but you could see price has been making a series of higher highs and higher lows. If price were to take out that last swing low, of course, we would not be looking for any potential cycle peak toward the end of the year. And all three of these things, by the way, would definitely signal lengthening cycles. And if we move towards that, listen, I just want to be right. I've said it from the very beginning. All that I care about is getting it right, not having some type of theory that I want to be correct. At the same time, the work that we've been following has allowed us to go ahead and position from a nice position of strength, and that continues. So what has been providing the greatest alpha, we will continue to stick with, or at least I will continue to stick with until it's proven wrong. If we do find out one of these three situations is occurring and that we're looking at the cycle lengthening out, there are different places to pivot to. You're all aware of Tech Dev showing the fractal of gold. We sat down with the root, and the root provided us some insight to perhaps what a lengthening cycle per blocks would look like, giving us a target somewhere between early February and to the middle of March. Those are things that we would definitely be looking at. And when you're looking at this work over here, by the way, you see over here this mid-cycle low was in July in 2013. In 2017, it was also in July. Now, the mid-cycle low appears later. If you go ahead and move this back, line up all those lows, there's a lot more symmetry to these cycles. It's my belief, or it's my thesis, that what we're seeing, and this was a huge help from the professor pointing out, that you know what we've seen so far is in all three cycles, all complete cycles, we've seen the mid-cycle low occur in July. Is that seasonal? Does it matter when the halving occurs? Each halving has occurred earlier in the year. Is it maybe not so much that the cycles are lengthening so much as the year after the halving, in that July during the summer, we're seeing a mid-cycle low and then price peak towards the end of the year? Maybe. It's something that we have to continue to follow. By the way, here's another vantage point to look at, and you can see over here, this is check on chain lining things up after price made that new all-time high. You could see this cycle in purple. It's outperformed 2017 to the upside in volatility. And it also did outperform in volatility to the downside, whereas this was much more muted, the 2017 cycle. And then you can see the consolidation length also much longer, where there barely was a consolidation in 2017. We don't know what happens next. We don't know whether or not, because of the longer consolidation, we see a steeper blow off top, right? We don't know if we remain muted. It's possible that we do see diminishing returns. It's possible that we don't see lengthening cycles and see diminishing returns, with a peak coming in somewhere between $140,000 and $160,000, perhaps by the end of the year. We will be watching for that. Again, it's a question of trying to get it as correct as possible in real time, rather than trying to make sure that like any type of theories or beliefs you have are proven correct. That's all we're trying to do. By the way, coming out from always, I've talked about off that mid-cycle low that what I potentially was looking for is perhaps, something like an 8-9x into the cycle peak. Let's take a look at that. But if you're trying over those next 2 years where you already have that fundamental plan in place to acquire as much Bitcoin as you can and doing it in a very calculated, risk-averse way, then it really matters to understand these price movements. 150 days, that's a small time frame to be looking at and considering for this type of investment. The 2012 cycle, you can see here in 2013, peaking higher. This is 11x, an 11x, 7x. Are we going to see something like a 9x, something in the average of the two, as we've seen up in. And that's where we are today. So 150 days, but at the same time, we'd always been looking once we get into liftoff to zero into that 35, 36 day period. Now lining the cycles up over here. This is scaled to the halving, by the way, and then aligned over here to the bottom of liftoff. And I just had the feeling that we were going to break out over here. That seems to be confirmed right now. Again, nothing set in stone, but we looked at what would happen if we did see that price fade back down and understand at that point that the model was no longer giving us that type of accuracy we wanted going forward. But until then, and this information was presented a long time ago. Could you imagine if you thought that you had all the time in the world on Bitcoin, would you be looking to position as we did off of wave one, off the correction of wave one, and now again off the correction of wave two? Of course not. If time's on your side, what's the difference, right? It's given us a great edge. Going ahead over here, the box has now been able to be narrowed, $193,000. That would be using the same percentage gain we had in 2017, a 260% gain off of the bottom of liftoff, putting us somewhere around $190,000, $193,000. If we do have a 9x, that would put us towards $260,000, and that has able to get on as far as time and price using the CTM model. Pre-planned adjustments help us get to where we want to be. And again, that's as accurate as possible going forward. With that being said, I think it's time to get a little bit into the technicals. Let's focus in on what we've been doing. Over the weekend, you saw the tweet. That was this double black diamond entry. Now, I'm showing you this on the 2-hour time frame, right? Generally, we hang out on the 8-hour time frame. And what you're looking at over here is the correction of wave two. Here's the better view we've been looking at, wave one to wave two. And now what we are looking for is to see whether we go into liftoff. We would like to see a V-tape recovery, a V-shape recovery, and then right around the new all-time high, perhaps above it, perhaps below it, a little bit of consolidation as we saw in previous cycles. That would not be a worry. Oh no, price is not able to go into liftoff. Actually, that would mean right on time. You could see over here as price made the V, the little bit of consolidation in 2013. And then in 2017 again. So if we see that type of price action, that wouldn't be a concern that, oh no, liftoff is not taking place. Rather, that would be actually something rather of the norm. And then what we would be looking for after is to see whether or not we actually start moving into that melt your face off move, that type of movement that would signify we are going into liftoff. And then we have a lot of, let's say, if that is occurring, a lot to lean into. You saw the video that we did recently with Cole talking about on-chain signals that could give us actually a precision exit. We have the work that Jesse did off of the big candle over here, the massive move that occurs 24, 36 hours, almost a 50% move. Jesse lining up fibs and giving us what was the exact peak in both cycles. If we get there, because remember when we were back here, I was like, look, I don't know how we're going to get there, but if we get to the bottom of liftoff with two waves, then we're going to be able to lean in. And it's the same thing. We don't know what price is going to look like, from this moment on. But if we continue seeing these things rhyme and on time, we will lean in, and we have the greatest team working together, providing the greatest accuracy out there. And I think we have a strong possibility of getting the top whenever that is. It really doesn't matter if it occurs by the end of the year, slightly after, slightly before, or not in this window at all. If we see that this model at any point in time is deviating, at that point, that will give us an edge. One of the things that actually Ian points out in this video, one of the main purposes of the model is allowing you to know when it's off. But until then, as we've done the whole way, we'll continue riding those signals and making sure we stay right on time. Now let's get back into what we saw over here occur over the weekend. This is the correction of wave 2. Here's the correction of wave 2. You all know I personally, because it's, again, we do this each and every day together, I've taken 2 black diamond entries, both of them taking stop losses. And that's why I talk about you have to take each and every one, because this one over here that occurred yesterday, obviously now, and you also added to the position off of the break of the single black diamond. Let me talk about that. Let me take it down a second, right? And a little bit more softly as we get into the technicals, make sure we do that. So could you align that model from the bottom of wave 2? That's what we're doing over here. This model is aligned from the bottom of wave 2. Yes, I could go ahead and I could just go ahead and change that little bit of perspective. And instead of aligning it from the halving, go to, the bottom of wave 2. And then there you go. You would see it a lot like that. And that's, David, thank you for saying that. We could go ahead and lighten these up over here, and take a look at this type of accuracy coming into the potential cycle peak over there. And I'll play with that after we get off this live stream. I'm glad you pointed that out. That's a nice look over there. And I want to have multiple vantage points at this particular time, right, David? I want to be able always to be viewing Bitcoin from multiple angles, multiple vantage points, looking for that confluence and helping us stay, as closely aligned as possible. Let me slow down 1 second over here. If you didn't see, please go to my Twitter feed and look at yesterday's tweets. Over here, this steep red line was a double black diamond entry, right? I loved what happened, by the way. I love that liquidity grab. You see price coming down and then shooting up into the trigger. And that was why I sent out that tweet letting everyone know that I was getting on that trade. And then as price came into the resistance is this orange line over here, which is a normal black diamond entry. I said, you know what? What I'm doing is now moving my stop loss to break even on this trade. And then I was able to go ahead and pick up this second entry over here. The risk was the same. The risk is always the low of the lowest price point of the correction. And then I had basically a free trade on now with the same amount of risk that I took on this trade. And now we've come ahead and we've taken out the green line, which I call the conservative entry. By this time, there's a high probability that the low is in of the correction. It's not a given. It's a good entry for most. I didn't need to take this entry because I just took a black diamond entry. At that point, though, I go ahead and move this stop loss to break even. And now sitting pretty as we come out of this correction, and we will see what happens next. All right, everyone. Let me go ahead and see if there's any questions we want to talk about. Fire session. I think it's going to be a short one. I want to make sure today, as we are always, thank you. I am too, especially on a Monday. I miss you all over the weekend. I look forward to the Monday sessions like no other. And I know that each and every day we put in strong sessions and good work. If you're new here, by the way, welcome. Go to the announcements channel in Discord and please start catching up on the Discord. Also, search. The tool is an amazing feature. Search exiting Bitcoin, right? And then lines of repair, and you'll see exactly how we take these entries, how we manage our risk off of it. Make sure you're doing that. I want to, because this is a big deal here today, as again, going back to the last time I got to get together with Ted and Ian on the August the 13th, talking about the next pivotal. Look how far in advance we've always been working. Here we are now. It's a big day, the bottom of liftoff. I want to make sure everyone following CTM from afar is also privy to that information. Again, I know that we get to work here together each and every day together, but from afar, I want to make sure that everyone is able to keep with us. That's important to me. So with that being said, I hope you all have a beautiful, beautiful day. And I look forward to tomorrow's session where we get to do it again. Tomorrow's session is going to be a lot more of the norm. After the presentation, I will be able to go ahead and take all questions, and we will go over anything that we, that we want to clarify together. Until then, I wish you all have a beautiful day, and thank you so much for being here. Let's go out with a little bit of honeymoon just one more time, and then see if there's anything else we want to close with. I'm not done. I'm not done. We got to talk about some other markets really quick. Let's do that together. There's no way. We've seen a lot happen over the week. Remember Friday session? We were like, listen, this could be a big turning point. If it is, I said I'm going to be late, right? If we track the sell impulse, but I talked about yesterday, like if this winds up being a market crash, like I'm going to be late to realizing it because my intuition tells me different. Here we are, and we've actually have recovered, NASDAQ recovered all those gains. If you go ahead, I have these two fakies that have been highlighted. All of you that are following each and every day understand why I have them in. Let me go ahead and remove them. Let me draw in a line of repair that has since triggered, right? That's from the top. And then over here is the next touch. And we can see that the NASDAQ has broken out now of that buy impulse. So that looks good. That looks healthy, right? Not much else to say. More importantly, too, like we are into an area like this where price is consolidating. So now going forward, right? If we were horizontally to break this area, that would be a big red sign. And at that point, we would be expecting a much further correction. At this point, being that the buy impulse has faded over here, or we have a buy impulse, do we go ahead and we move this down? But listen to this, right? Now, if you took this sell impulse, the stop loss is at the highest price peak over here. And until that happens, this sell impulse is not over with. Now, at the same time, if you're leaning in only on the buy side, you have a buy impulse over here. We're just going to leave it like this as is right now. And I'm just going to add this one qualifier over here. And that's if price were to break down below there, I'll tidy it up nice and neat. Later, back below that line, that would be bad news bears. S&P 500, this was interesting. We broke below the range with a breakdown, retest, resumption down, and then price over, the futures were up over the weekend as soon as they opened up in Asia. Price came back above that line, confirmed it as resistant, confirmed the broken resistance as support and resumed off. This is a traditional CTM entry all day long. Break above the resistance, confirming it to support, and then the resumption up. That information is essential. That information is found in the course. It focuses mostly on currency markets. It will make you the sharpest trader out there. And all of the principles shared in that course is what we use regularly here in CTM. The dollar is something else I want to take a look at. Reason why we looked at on Friday, we had those two sell impulses that triggered off of the resistance. And what's happening now, right? You can see this right here. I guess this is where I'm focusing on, this broken support now, right? Price is now coming in, and it's kind of because it's not a perfect touch, but looking to see if that's going to be confirmed as resistance. And we will see. Get above this line, and the dollar strength is definitely back on if we resume down at this point, but a lot of nothing. And I think that's where they like the dollar. I don't know how much movement we'll see in the dollar over the next couple of weeks. We will see. And the reason I say that is because I believe it's the 15th of December. We're looking at the next FOMC meeting. We will talk more about that as we get closer to the meeting, whether or not we think that they're going to continue with the taper, whether or not they're going to increase the decreasing bond purchases, or whether or not they just hold off. It's too soon to make that that type of adjustment after Friday's huge sell-off off of low volume. Let's give the market some time, and we will figure it out in real time. Always not trying to impose our will on the markets, but being a student of the market and following price and price action, and then adjusting accordingly. All right, everyone. That's it, everyone. I hope you have a beautiful day, and I look forward to tomorrow. I'll see you all then. Thanks, everyone. May God bless you.